Most people think Bitcoin dies in a single moment, a headline, a red candle, a chart falling off a cliff. But Bitcoin doesn't die like that. It dies slowly, quietly, in public. And if you're watching this right now, it's probably because it feels like we're back in that place again. Prices are shaky. Confidence is thinner than it was a year ago. And the same question is floating through every corner of the internet. Is this finally it? That question matters right now because Bitcoin is no longer a weird internet experiment. It's owned by pension funds, held by governments, traded by people who don't even know how it works. When Bitcoin moves now, it doesn't just hurt speculators. It rattles trust. Here's the uncomfortable part. Every time Bitcoin looks like it's about to die, it feels different. And every time the reasons sound logical, responsible even. In 2011, Bitcoin died because it got hacked. In 2014, it died because Mt. Gox collapsed. In 2018, it died because the bubble finally burst. In 2022, it died because leverage met reality. Each time, the story changed, but the pattern didn't. To understand why people keep asking this question, you have to understand what Bitcoin actually is, without the mysticism. Bitcoin isn't a company. It doesn't produce revenue. It doesn't care about earnings calls or quarterly guidance. Bitcoin is a system that turns time and electricity into money. That's it. Miners spend energy to secure the network. In return, new Bitcoin is created. Every 4 years, that creation rate gets cut in half. No meeting, no vote, no emergency override. This is where the discomfort begins, because Bitcoin doesn't respond to fear. It doesn't adjust to recessions. It doesn't get rescued when things go wrong. Traditional markets are padded with safety nets, interest rate cuts, liquidity injections, bailouts with polite names. Bitcoin has none of that. So when money gets tight, when rates rise, credit shrinks, and risk becomes expensive, Bitcoin gets hit first. Not because it's broken, but because it's honest. Here's the math most people ignore. Bitcoin goes through a cycle roughly every 4 years. The supply shock happens. Prices rise. Attention follows. Leverage builds quietly underneath. Then something breaks. It always does. And when leverage unwinds, Bitcoin doesn't fall gently. It collapses. 50%, 70%, sometimes more. At that point, the declarations begin. This time is different. This time, it can't recover. This time, the math doesn't work. But the math hasn't changed. What changes is who's left holding risk. After every crash, miners shut down, projects disappear, liquidity evaporates, and what remains is the base layer, still producing blocks every 10 minutes, completely indifferent to price. That indifference is unsettling, because it means Bitcoin doesn't care if you believe in it or not. Now here's where the hype and reality split. The hype says Bitcoin is digital gold, a hedge, a safe haven. Reality says Bitcoin behaves like a pressure valve for global liquidity. When money is cheap, Bitcoin inflates. When money tightens, Bitcoin deflates. That's not ideology. That's history. Look at the timing. Bitcoin's biggest crashes didn't come from internal failure. They came when the world changed, when interest rates moved, when leverage ran out of oxygen. So when people ask if Bitcoin is dying again, what they're really asking is something else. Can this system survive without constant belief? Because belief used to be enough. Early on, everyone involved understood the risk. The volatility was the price of admission. Now the audience is larger, less technical, more emotional, and that changes the stress test. Here's the quiet irony. Bitcoin was designed to survive distrust, but it's now being judged by people who need reassurance. When price falls, nothing inside Bitcoin breaks. No alarms go off, no emergency meetings happen, only people panic. That disconnect is where the fear lives. The real risk to Bitcoin isn't a single crash, it's expectation mismatch. People expect stability from something that was never designed to be stable. They expect protection from a system built without protection. And every cycle, that misunderstanding gets exposed. So, is Bitcoin about to die again? If dying means price collapse, panic, disbelief, and long silence, then yes. That has happened before, and it may happen again. But if dying means the system stops working, blocks stop, transactions fail, the rules change, then history suggests something uncomfortable. Bitcoin doesn't die when it's ignored. It dies only if it's altered, and so far, it hasn't been. Which leaves one question that never gets answered in the moment, not whether Bitcoin will survive this cycle, but whether the people using it understand what they signed up for in the first place.